Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look at the Aussie versus US dollar. Today's date is August 1st, 2023. Well, the Reserve Bank of Australia did meet overnight, and they decided to keep rates unchanged at 4.10%. That's the second consecutive month that the central bank has kept rates unchanged. That's a trend, it seems, so there's no skip or anything like that. They indicated that they are looking perhaps for the impact of the rate hikes to date to start to increasingly show its impact on things like the growth forecast and also on the inflation going forward. So that helped push the Aussie versus US dollar to the downside. Recall from yesterday I spoke about how the market was moving toward this cluster of resistance right through here. Big update to the upside yesterday off of the short squeeze ahead of that interest rate decision. The 200-hour moving average, the 50% retracement level, the 100-hour moving average, and 200-day moving average all came in this area right through here. And as you can see, the price moved up in between the 200, 100, 200-day moving average, 50% retracement, and then rotated back to the downside and trading here today. Asian traders ahead of the interest rate decision leaned against the 100-hour moving average, and this is a bar where the central bank kept the rates unchanged. It broke below the 100-day moving average, or actually tumbled below that level pretty easily, and that increased the bearish bias. So sellers against the 100-hour moving average, sellers up here, were rewarded with a move to the downside and trading here today, and that momentum has continued in the New York session here with the low price moving down toward these lows going back to June and July. These lows came between the 0.6594 level and 0.6603 level. A number of different lows through here in that area, and that is what has been approaching trading here today. The low price today came in just ahead of the 0.6603 level, around the 0.6605 level, and we have seen a rotation back to the upside. I would watch this area right through here, this yellow area right through here. You can see the number of different swing lows and highs that formed that area over time back in June and July. As long as the price remains below the 36 to 52 level, sellers remain more in control. That's if you think that the bias is still to the downside. Those buyers against this low right here want to see that broken. If they can't see that and the price starts to break back below the 0.6594 level, then the bias continues its shift to the downside. We could see, and we should see, further downside momentum. Now, looking at the daily chart, in addition to those lows that we saw in June and July, there's a number of other swing levels through just below that area between the 0.6544 level and 0.65847 level, and those levels correspond with these swing levels through here and here and here, forming a ceiling there, and then we found a floor here before moving to the upside, another floor here, another floor here. We broke below the floor and used that area as a ceiling on the way to the low price for the year down at 0.6457. That level is going to be in play if we break lower, and then we have these lows in June and July, which held up ahead of this area. So this area, if we break below the level, below the 0.6544 level, will open the door for a rotation back toward our, again, low for the year at 0.64576. So sellers are in control here in the Aussie versus US dollar, looking to get below the June and July lows near the 0.6595 level, get below that level, and get below the 0.65448 level, and opens the door for a run toward the low of 2023. There's a technical look at the Aussie versus US dollar after the RBA rate decision. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.